billionaire can pay a lower tax rate than your teacher. Completely legally. No crime, no offshore island, no shady movie accountant. ProPublica got the actual IRS files, and the 25 richest Americans paid a true tax rate of about 3.4% on how much their wealth grew. 3.4. Meanwhile, you're taxed before your paycheck even hits your account. So how? It's not really a loophole, it's that the whole system is built to tax one thing and basically ignore another, and the rich just live entirely in the ignored part. Let me show you the move. It's called buy, borrow, die. And once you see it, you can't unsee it. We're taught taxes are simple, you make money, you pay a cut. And for you, that's exactly it. Income tax comes out automatically before you can blink. But here's what the system never says out loud. It taxes income hard, and wealth barely at all. Income is money that moves, your paycheck. Wealth is stuff you own that grows, stocks, companies, real estate. And rich people don't get rich from a paycheck. They get rich from owning things that go up. So if you never earn income the way the tax code cares about, you never trigger the big tax. You just sit on assets that balloon, tax-free, until you figure out how to spend them without technically selling. That's the game. Here's how it's played. This isn't a conspiracy theory, it's ProPublica's reporting on leaked IRS data, the actual tax code, and a strategy a law professor literally named. All legal, all on the books. Let's break it down. Everything starts with one split the tax code makes. It taxes income way harder than wealth. Earn a salary? Your top dollars can get taxed up to 37%. Make money selling an investment you held over a year? That's long-term capital gains, taxed around 20%. Right away, the person living off investments pays a lower rate than the person living off a paycheck. But it gets better for them, because you only pay that capital gains tax when you sell. If you just hold, and your stock goes from $1 million to $1 billion, that $1 billion in gains is taxed at zero, because on paper you never made anything. It's unrealized. So step one of being rich: own stuff that grows and never sell it. But wait, if they never sell, how do they buy yachts? Glad you asked. That's the move. This is the strategy, and a law professor named Edward McCaffery gave it the perfect name: buy, borrow, die. Now, before you grab the pitchfork, it's all legal, and the honest version has nuance. First, that ProPublica 3.4% true tax rate versus wealth growth isn't how we normally measure taxes. We tax income, not your net worth going up on paper, so comparing tax to unrealized gains is a little apples to oranges. Fair pushback. But here's why it still matters. For you, your wealth growth basically is your paycheck, and it's taxed instantly. For them, it's in assets they never have to realize. So the system treats two kinds of getting richer completely differently, and the rich just live on the lightly taxed kind. And the fixes are genuinely debated. Taxing unrealized gains is messy. Stock crashes next year. Do you get a refund? Which is part of why it hasn't happened. It's not a cartoon villain. It's a system with a giant, well-defended door, and almost nobody told you the door's there. So what do you do, since you're not buy, borrow, die ing on a normal salary? 1. The game is income versus ownership. Shift toward ownership. Every dollar you move from spending into owning assets nudges you toward the lightly taxed side. 2. Use the normal person versions of these tricks. They exist. A 401k or Roth IRA lets your investments grow without getting taxed every year. Same basic idea: let assets compound untaxed. Scale to you. That's the most accessible rich person move there is, and most people leave it sitting on the table. 3. Stop worshiping salary. A bigger paycheck is just a bigger tax target. Owning things that grow is how you get to the side of the table that plays the game instead of funding it. So the rich pay a lower rate not by cheating, but because the system taxes income hard and wealth barely, and they live entirely on wealth. Buy assets, borrow against them tax-free, die and wipe the gains. The one idea: the tax system punishes earning and rewards owning. You can't out-earn that. But you can slowly move to the owner side even a little using the same basic move they do. If this made taxes click, subscribe, honest version, loophole and nuance. See you next one.